In this video, I shall be reviewing with you the AUDJPY pair, where the possibilities of either taking a bullish or bearish stance shall be looked into in details as we head into the final trading week for the month. A matter of fact, this is a follow-up detail on the AUDJPY as I shared something on this pair during the course of last week's trading session, and I regularly did an update in that regard in the comment section of my TradingView platform, where I gave intermittent updates on how we are going to take advantage of that bullish momentum during the last week trading session. Now, at the close of of last week, we saw our price has been consolidating on the 4 hours time frame. But the first thing I want us to look at here is on the weekly time frame, where we can see that it is obvious that price has been respecting a bearish trend line for quite some time now. As you can see, if we go down to the past, we can see how price has been respecting that bullish trend line. Sorry, give me a moment. Since February 2020, we can see price has been oscillating right above that bullish trend line, and at no point in time did price break below that trend line till we got to 98.400 area during the last couple of months. So now we go down to the daily time frame. Let's see what is happening on this chart. The first thing we will notice here is this: I do have a temporary bullish trend line around this area. You can see on the screen with a dotted bullish trend line, and I'm of the opinion that price will either go to the upside from this place, or we could have a breakdown of that bullish trend line where we see price break it down during the next week, a retest of that structure to push price further down into the major bullish trend line we identified on the weekly time frame. So now with the structure we have here, with these two buyers we have here, we want to scale down to a much lower time frame to be able to see what price action has been doing in the last 1 to 2 weeks. So if we scale down to the 4 hours time frame, then things become a little bit more clearer. As the first thing I have observed here is this: if we look at what has been happening since the beginning of this month, we can see how we had a bullish move to the upside, and after price tested 96.850 area or 96.900 area, we saw our price did a retracement back into the bullish trend line we identified on the daily time frame, that is the temporary bullish trend line. And one thing you will notice here is this trend line has been respected multiple times, and at the same time we can see that this area has been a major factor in pushing price further up. So in that regard, another thing we also observe here is this: we can see our price has rejected this area multiple times, giving us a clue into the strength of the buyers at this point in the market. We can see how this area has been respected multiple times. So what do we want to do at this point? We want to identify that area as our demand zone going into the new week. So if you allow me, we could do this. We could identify this area, make this area our new demand zone, as this will be our guide going into the new week. So let's label this area. Let's label it to the demand zone. And you will agree with me that a demand zone sitting right on a bullish trend line is more or less a very strong signal to guide our actions going forward. So with this demand zone sitting here, we can see it's clear that price has been respecting this area multiple times as we head into the week. So one thing I want to be looking out for is the bullish momentum in that regard. So how are we going to take advantage of that bullish momentum when it finally happens? The first thing we want to be doing here is to identify the key level that will guide our actions going forward. If we look left, we'll notice how this area at 93 point or 94 area has been a determinant of price action in the past. The first one was here on the 6th of June. We saw this area being a demand zone. we saw a demand zone here, then it became a resistant area, resistant, then demand again one more time, a demand here, resistant, and here we don't know what is going to happen. So this is more or less a question mark. So you will agree with me that with this information we just identified here, we should be having this area as a key level to guide our actions going forward. So one thing I want to be doing here is to bring out my live chart and connect the series we just identified here so that it will be our guide going forward. So bringing out our line chart at this point, we have something like this. Hold on a second. We have it sitting right here, and we have, so let's give it a golden color. That's our key level, and we label it key level at 9400 Japanese yen. Hold on a second. Let's give this a gold color, and sorry, let's place it at the top and on the right hand side of our screen for the sake of clarity. So we definitely have something like this going into the new week. So I want this to be right. Bring to the front. Okay. So we have something like this going into the new week. So what do we want to be doing? How do we want to take advantage of any move in either side? So what I want to be looking out for is a significant breakout of that key level as we head into the new week, a retest of structure, which will also share a confluence with the key level at 94.00, and at the same time that bullish trend line where we will be looking for a reversal pattern on lower time frame to support a trend continuation to the upside. Now, this is the bullish scenario we're expecting, and if this happens, we should be having our entry points. Remember, my entry point is always the purple dotted line, which I'm about to place on the chart. We have our key level sitting right above the right. We have our entry level sitting right above that key level, which at this point in time is around 94.166. Remember, this is subject to changes as we don't know how price action is going to play out during the early hours of the week. So I'm just assuming right now, if we have an entry point right above this area, then where will our take profit target be? Remember, we have a bullish impulse leg, which we identify here, which we understand that after every bullish impulse leg, we normally have a retracement phase that will push price to the direction of the prior leading price action. So for us to have our take profit target, we want to be having an extension of that impulse leg into the 127.2% and the 1414 area. And if we bring out our Fibonacci extension tool and run it through that impulse leg, we have something like this with a take profit target sitting at least at around 99 Japanese yen. So that's close to about 500 pips to catch on this one. And let's see how price plays out in that regard. So we want to be having our stop loss right below the, the key level, which also probably below the bullish trend line as well. And this is what we will be having with about 480 pips to catch if price goes bullish. Now, the second scenario we're having here is the possibility that price could break down that key level or respect that key level. That is, we see a respect of this key level, we see reversal patterns on this area, which could lead to a breakdown of that key level. And remember, because we have a demand zone sitting right at around 92.5 and 93 area, we can't just jump into that selling momentum as we want to see significant signal that will support that bearish move. And what do we need to do, or what do we need to see to be sure that we're having a bearish momentum? Though we have a breakdown, which could be a signal, and we want to be waiting for a retest of structure, which could be a retest of that key level or that bullish trend line or somewhere around here, where we look for patterns that support a trend continuation to the downside. So if we do have this kind of scenario, and depending on where where the reversal pattern starts, we want to be having our entry point right below the key level, and which is here with the dotted line here, and we have our stop loss right above that key level. That is if we are going to be doing a sell. So if we have our stop right above that key level, and remind you this is subject to change as we don't know how price is going to play out during the week. So a take profit target could be sitting at around 90.500 area, because if we look left we can see that we have a structure around this area that has been the neckline in the past. Yes, that has been a neckline in the past, which could make price do a rejection and push price further up. So with that regard, we have about close to 300 pips to catch if we see a selling momentum come into play. So this is what my scenario is going to be like going into the new week. And if you want to look at the previous AUDJPY I shared last week, you can check the comment section of my TradingView account to see that. You can always follow me on my TradingView so you don't miss out on the regular updates I normally share in the comment section. I hope the data herein will be enough to help you make your individual decision when the market opens. And if this was indeed useful, kindly support me by liking and following me on my TradingView account. Thank you for watching and do have a wonderful day. Bye.